Absolutely.
There's a big degree of outperformance over there. So I'm going to talk a little bit about that. So, you know, as they say, all that glitters is gold indeed. And this week, the big headline really was MCX gold hitting an all-time high. It hit a high of 56,000 rupees. Now, that's a gain of 17.5% in the last 1 year alone. In fact, international prices hit $1,900 an ounce as well. That's a gain of almost 16% from the September lows. That's on international gold prices that will come up for you in just a bit. Now, the question we're asking today is, with an expectation of a single-digit return in equities this year, or maybe not even that, is it better to move to alternate asset classes like gold? Will there be a continued up move over there? Now, what I did is I tried to assess the returns of gold compared to the Sensex for 1, 5, 10 and 15 years. And I noticed that for a majority part of the last 15 years, gold has seen a significant outperformance. Look at that, in the last 1 year, 13.9% up move in gold, while Sensex barely 4.5%. In 10 years, is the only one where gold has not outperformed. In 5 years, 13.5 and 12.5. And look at 15 years. If 15 years back you had bought gold, your compounded growth rate would have been almost 12% compared to just 7.6% for the Sensex. Now, of course, we do know why gold is rallying. A couple of key factors here. There's expectations of a mild global recession. There's a further weakening of the dollar. There's geopolitical flare-ups. So, you know, there's an energy crisis in Europe, because of which perhaps people are moving their investments to safe haven like gold. In China, there's a reopening trade, so perhaps consumption of gold would go up there, and hence gold prices are looking good. But the question we're asking now is, does gold do well in a recession? And yes, it does. In 5 out of the last 7 recessions, gold has actually given positive returns. So we pulled out the data for you. Just look at that. Way back from December of 1973, gold gave you a 66% return in that recession compared to the Dow, which was down about 10%, and so on and so forth. Just take a look at 2001. Gold gave you a 4% return, while the Dow was down about 8.2%. And finally, in March of 2020 to April 2022, gold gave you a 20% return. Of course, the Dow also had a commensurate increase over there. So that's the big takeaway, right? Gold did well in 5 out of the last 7 recessions. Just quickly on to what brokerages are forecasting. JP Morgan has said that oil and gold will drive the commodity returns in 2023, and they forecasted gold prices at $1,860 an ounce. It's already surpassed that level. But there is one risk. The downside risk is if there is a soft landing scenario. So I want to, in fact, toss this question to our guest, Ajay Srivastava, who's joining in of Dimensions Consulting. Ajay, you know, this is something that is right down